Hey guys, we're going to do our live talk this morning about GST for your small business. So, we have covered GST for small business in a previous video, but I believe that this is one of the most important things to talk about for small businesses, so we're going to do another quick talk about that today. If you guys have questions about GST after the fact, obviously please feel free to hit the send a message button, and I am happy to answer any questions that I can for you guys. So I'm going to start this tax talk by talking about an experience that I had this week, which is a very important point that I need to cover with you guys about GST. So this week I had a client come in and, we helped her file some GST. Now, a very large misconception is that if you get a GST number because you make more than $30,000, you only have to file a GST return if you make $30,000. Now, how it works is that if you get a GST number, you have to keep the GST number regardless now of whether you make $30,000 or more, unless you go and actually formally close the GST return, the GST number with CRA. So closing the GST number with CRA is kind of a giant pain in the butt. So I always suggest that you need to keep filing GST. Excuse me. The upside of claiming GST, even if you didn't make $30,000, is that if your tax sales drop, then you can actually possibly get closer to getting a GST refund, which is never bad. So we want to talk about that. So basically, if you have a GST number, in 1 year you earn more than $30,000, you need to file your GST because you made more than $30,000. But going forward, you still have to claim GST regardless of whether you continue to make $30,000. Now, if you're significantly going to drop your sales and you feel like you're never going to hit $30,000 again, then it's worth it to go to CRA and formally request to close your GST. But they do not close GST numbers due to inactivity. That's not how it works. And if you fall behind on your GST refunds or your GST returns, they can actually hold your personal tax refunds until your GST account is considered compliant again. Okay, so we see this happen quite often, and unfortunately the way that that works is that the personal tax return could be held for up to 80 days. So we don't want to have that happen. That's almost 3 months, okay? So if you have a GST number and you did not make $30,000 last year and you did not file your GST return, you need to do that. Hey Nancy, no problem. Thanks for tuning into the talk. So let's talk about some general rules for when we need to charge GST. So obviously we've been talking about this here for the first couple minutes. Is if you make more than $30,000, you are legally obligated to get a GST number. Now, you do not have to get a GST number until you hit $30,000 in sales, but you need to make sure that you do in time when you do hit $30,000 with sales. Now, you can get one when you're getting close to it, and then other people will go ahead and preemptively get a GST number. They'll get a GST number preemptively because they don't want to be scrambling on top of trying to run their business, trying to worry about getting a GST number while they're already running. So there are a couple scenarios where getting a GST number right off the hop is going to make your lives a little bit easier. For a lot of incorporated businesses, they will go ahead and get a GST number right at the beginning, and we'll do that because it's just easier. It's one less process. You start charging GST, you don't have to change the way you do invoicing, and it just makes things very simple. For home-based businesses and sole proprietorships, a lot of them will not get a GST number preemptively. They'll wait until they get close to the $30,000 mark, and then they will go ahead and then they'll get a GST number. So yeah, if you're making more than $30,000, you need to get a GST number. There's very few industries that are GST exempt, okay? I do have several clients that do food sales, so they bake goods or food, and then it's dictated based on the quantity of how you're packaging. If you guys have questions, I'm going to post the link to the CRA site that determines whether or not your product or service needs GST, as well as the exempt GST list. So I will put those in the title of this video when we are done recording today. So if you bake from home, say you make muffins, I'm just going to use muffins as an example. If you bake muffins and you sell them in packs of 6 or less, you are GST exempt. If you package them in packages of more than 6, then you are not GST exempt. So it's very important to differentiate that. Things in the medical field, a lot of medical professions will be exempt from GST, but massage therapy and any kind of rehabilitation services are not GST exempt. So if you're a massage therapist, you need to be claiming GST. If you are a supplier of medical goods, you don't need a GST number. So for example, I have a client that's a dental technologist. So he makes parts for braces and other individual little pieces of dental stuff. He is GST exempt because he does not, like, you just don't have to have GST. Now, if you've got somebody that, I have another client that makes safety glasses. So they actually have the machine in the back of their shop that actually makes the lenses to go in prescription safety glasses. They are also GST exempt. So they don't have to charge GST, but they can still get a GST number if they want and collect the GST back on the expenses that they incur. So very interesting exceptions when it comes to that. But yeah, that's the easiest points to think about when we talk about whether or not we need a GST number or not. Now let's talk about a few other things when it comes to GST. So yeah, so basically when we talk about what kind of income qualifies for GST, we're going to talk about, so if you have, say if you are working through a company like Arbonne or Stella & Dodd or Rodan & Fields or any of those other home-based business marketing companies, you will get paid either by self-employed commissions or you will get paid through a T4A. You need a GST number if your T4A sales are over $30,000, okay? Also, you need to get a GST number if your collective self-employment earnings are over $30,000. So I get asked a lot and it goes, hey Danielle, I have this side gig over here and I make $5,000 a year. And then I have this other gig and I make about $15,000 a year. And then I have this other one that I make about $10,000 a year. Your collective self-employment income is what reaches the $30,000 threshold. So it does not have to be one individual business, but it needs to be all of your GST, all of your income that's eligible for GST totaled at $30,000. That's when you need a GST number. And basically it's going to be on, like I said, any kind of self-employment income, any commissions that you're earning. Now, if you have commissions that are on your T4, so if you are a salesperson, things like that, you do not need a GST number for your commission sales because you are considered an employee. But as soon as you cross over into self-employment territory, then you need a GST number. Stuff that isn't, so income that's not considered GST eligible is going to be things like salaries from your job, investment income, or social support services. So if you claim AISH, if you claim any kind of assisted living money, if you have WCB income, if you have wage replacement income because you're on a long-term or short-term disability policy, those do not require that you get a GST number. Those are still considered employment income. So as long as it's employment income, you don't have to get a GST number. So if you get grant income to do your job, that's also not GST eligible, so you don't have to claim GST on grant income. And then you don't have to claim GST on things like grocery sales. So again, we talked about food and distribution. That one is determined by the packaging. And again, I will post the link so you guys can take a look at that. But the packaging is what determines whether or not you are GST eligible or not. Sales on services outside of Canada, you do not have to claim GST on international sales. And the reason for that is that we don't, like, that's not how it works. So we don't get GST credit on the expenses that we incur that are foreign expenses. So if you have a subscription and it comes through your credit card but it's in US dollars, you don't get to claim GST on that. So just like the same way, you don't have to claim GST on the income that you earn in another country, okay? But you still have to report that income. You just don't have to claim GST on it. Also, music lessons. That's another one that's actually not GST eligible. So if you are a music teacher, if you do private piano lessons, if you do singing lessons, anything like that, you don't have to pay GST. So So once you cross the threshold, you are required to voluntarily report the GST regardless of whether you hit $30,000 or not in a given period. So like I said, if you get it and you have 1 year where you make more than $30,000 and then the next year you make less than $30,000, you are still required to file a GST return. If you feel like you are not going to hit $30,000 in sales again, then you can call CRA and close your GST number. But they're going to give you a hard time if you open and close and open and close and open and close, just because it's a pain in the butt. And they're just going to tell you that you won't be able to close the GST number because you're flip-flopping. So a lot of the time it's just easier to keep the GST number open. But again, you want to make sure that those GST returns are filed. Otherwise, they will hold your personal income tax return until you file your GST. So, yeah, that's the easiest part. Now, if you are filing GST, you will get a form from the government that has an access code, and it has the period that you need to file, and it will also have a few other things on it, like your business number, in case you don't remember what the business number is. When you first set up your GST number, you will very likely be set up with a partial year GST number, which means that, say we got you a GST number today, so it is August 15th, you would have a period of filing from August 15th until December 31st. That's if you're a sole proprietorship. If you are a corporation, then you have to choose your year end when you register for a GST number, and they will either make it quarterly or annual, and they will do it based on whatever year end you choose. So if we incorporated a company today and they had a July 31st year end next year, they could set up a GST number today, and if they choose to be an annual GST filer, then the GST would go from August 15th to July 31st. Sorry about my phone in the background. Now, you can either choose to be quarterly GST or annual GST. So if you are yes, I absolutely help with assisting when filing taxes. So if you have a GST number associated with your sole proprietorship and you bring us your tax return at tax time, I do not charge you any more to do your GST return, because basically once we're adding up all your totals for your actual tax return, the GST component of that is really quick and simple right after. So we file that as long as you bring us the form that has the access code. That's what I need in order to help you file your GST. So when you are a sole proprietorship as well, you have until June 15th to file your taxes as well as your GST. But you need to make sure that those are filed by June 15th, because then there will be a late filing penalty. And unfortunately though, even though you have the late filing deadline of June 15th, the GST and the tax return will incur interest and penalties as of April 30th April 30th, so the actual cutoff for personal taxes. So my suggestion is that you don't leave your sole proprietorship taxes until June 15th just because you have until June 15th to file. Again, though, if you are getting a refund, or you normally get a refund, then you can file your taxes whenever you'd like. But if you owe GST and you get a personal tax refund, you still need to make sure that your GST is filed by June 15th or by April 30th so that you can avoid those interest and penalties. So it makes it a little bit interesting. But yeah, so like I said, you can claim GST on, you can either choose to be quarterly or annual GST. If you are quarterly GST, then your reporting periods are going to be every 3 months, and then you are required to file by the 30th day of the following month. So if you're a January to December year, so you're a sole proprietorship and you choose to go quarterly, then you are going to file GST for January to March, and that's due in April. You're going to file from April to June, that's due in July, yada, yada, yada. So you're going to do that kind of system, and then your last GST quarter will be due in January of the next year. So you don't get the extended filing deadline if you choose to be quarterly GST. If you choose to be annual GST, then you have the extended filing deadline to get that GST done at the same time as your taxes. So those are very important reporting deadlines that you guys need to pay attention to. You do have the ability to switch between annual GST and quarterly GST once you've set it up. There's a form that we file that basically requests that you want to change your GST. It is unfortunately subject to a decision made by CRA, so I can't promise you that they will absolutely change your GST or not change your GST. That's dependent on mostly on what desk your tax return ends up on. That's pretty much how it works. But yeah, when we're talking about GST for the businesses, if you decide that, you know, you got started and you were annual and you're, you know, kind of pissed off about having these big giant tax bills at the end of your year, you can switch to quarterly GST. Which is just fine. But again, you do have to do that application in order to change your filing period. I suggest that people that are running like that are completely self-employed, so if it's not just your side hustle and it's your actual it's your 9 to 5 or equivalent of, you should go quarterly. And the reason why you should go quarterly is that you don't, like I said, number one, you don't want to end up with those big lump sums at the end of the year, but number two, it also helps you re-engage your business. So when we go for a full year without actually touching base inside our own books, it becomes really hard and we can become very disconnected with where our business is at. There are lots of businesses that choose to file annual, and that's perfectly fine. But quarterly will give you that re-engagement, like I said, with your books. You'll be able to see where you're at. Then that being said, too, if you are an annual filer and you don't want to switch your GST to quarterly filing because you don't want to be responsible for those extra deadlines, then what I do suggest is that you at least do some bookkeeping for your business or have somebody assist you with your bookkeeping every quarter so that we can get a sense of where your business is at and how much you're going to pay in tax and a few other things, just because, again, we want to avoid those big lump sums if we can help it. Okay, so that's kind of the big stuff. Let's see, what else do we want to talk about on GST? So with GST, obviously, like I said, if we cross those deadlines, there is interest and penalties. Now, when it comes to interest and penalties, there's going to be a late filing penalty. That's going to be a percentage of what you owe. And then if you also still owe on GST, then you are going to owe interest and penalties. So the interest is about 1% every 30 days, give or take. So that's, yeah, that, again, we don't want to incur those. It's not as high as people talk about. There's lots of people that are like, oh my God, it's so high that, you know, I need to freak out about it. That's just not how it works. It is a percentage of what you owe. So if you wanted to guesstimate how much tax you're going to pay, you're basically going to use your sales and you're going to take 5% of that. Now, that's the absolute worst case scenario for what you could possibly owe in GST. But the way GST is calculated is that we take the GST collected on your sales at 5% versus the GST paid out on eligible expenses. So let's talk about eligible expenses when it comes to your business. So meals are GST exempt or GST eligible. Advertising and promotion, a lot of that is GST eligible. Again, unless it's a US based expense or another country based expense, then you do not get the GST credit on that. Insurance sales or insurance costs, so that's vehicle insurance and that's liability insurance, professional errors and omissions insurances, those do not qualify for GST paid. So you do not get to collect 5% on what you spend on those expenses. Your cost of goods, so your supplies and your purchases, your office expenses, your rentals, all of those have GST on them. One other thing I get asked a lot about is subcontractors that work for your business. So we do have a lot of construction in this, in this province, specifically in Alberta. So when it comes to the GST on the on subcontractor expenses, it comes down to whether the subcontractor has GST or not. So when you are writing in subcontractor expenses into your business, you need to be receiving a full invoice from your subcontractor. If they are an individual, it should have their name, their social insurance number, and their address on it, and their GST number if they are charging you GST. If any of those components are missing from the invoice, you can get yourself in a lot of trouble because it is your responsibility to have due paperwork before you're writing off that expense in your business. You are not responsible for whether or not the individual contractor claims that income on their taxes. You are just responsible for making sure that your due diligence on your end is correct. So that's what you need from a subcontractor that's a sole proprietorship. If you need an invoice from a subcontractor that is an incorporated business, then again, you need the name of the business, you need the address of the business, and you need their GST number. So if they have GST and they're charging you GST, you need to request that GST number. If they refuse to give it to you, then I'm going to caution you not to write off the GST on it, because it is your responsibility to be able to provide that documentation if CRA comes and asks for it. Now, CRA is cracking down very heavily on subcontractor expenses, so I'm going to caution you that it needs to be extra diligent that you get your paperwork in order when it comes to your GST on your subcontractor invoices. So again, to reiterate, you are not responsible for whether or not they claim GST on their tax, or whether they claim the GST or whether they claim their income. You're just responsible for making sure that your paper trail is correct. So CRA will and can demand to see all of your subcontractor invoices. And again, you get GST depending on whether they have a GST number or not. So if you have a subcontractor that works for you that issues you an invoice that does not have GST charged, you do not get to write GST off on that. Okay, so that's very important when you're bringing your books and records into your accountant's office so that they can prepare your tax return. We do go through the individual pieces of paper to help you determine that, but we do have several clients that will do their own spreadsheets, which is just fine. So they will Excel document all of their expenses on all of GST. In that case, sometimes we do not see the actual physical paperwork. If we do not see the physical paperwork, we cannot be held liable for the fact that you are responsible yourself then for determining whether or not you can claim GST on subcontractor invoices or not. Okay, that's very important. But again, I'm always going to make sure that you have all your paperwork in order and that you are responsible personally, again, for whether or not you're claiming GST on those expenses or not. Okay. And it does make a difference. Obviously, you can choose to try and work with subcontractors that do have GST numbers, but you are not at liberty to demand that they get a GST number just so that you can write off the GST. That's also very important. So you do not need to... So let's go back to expenses. So when we're claiming expenses, other expenses that are eligible for GST are going to be travel expenses, again, as long as they're not US or other country-based expenses. So if you take an international trip for business, your plane ticket is bought in Canada, and your that kind of stuff is great. But if your hotel and your car rental are paid in the foreign country, you cannot write off the GST on them. If they are paid in Canada and you paid in Canadian dollars and you have a Canadian receipt that shows GST charged, then you can write off the expenses. So there's a lot of times where you'll go and you'll book a trip, and part of it will be booked up front and part of it you'll book when you get there. You can only write off the portion of GST on the expenses that have GST. So you can prove a receipt or an invoice that shows that you paid GST. If you cannot prove that, you cannot write it off. Okay. Duty, freight, and postage. So on regular Canada Post, you stick it in the mail, there's GST on that expense. You get to write that off. Now, if you are importing and exporting products and you are paying duty and freight and extra taxes at the border, you need to watch your invoices from those custom reports very carefully, because a lot of time what will happen is people will just take GST right off the lump sum total, and a lot of the time there are extra freight and duty charges that are not GST eligible that are included in the total. So again, you need to refer back to a receipt that actually shows the portion of GST that you are eligible to pay. So, or that you did pay. So if you get a customs report and it shows, the actual shipping costs, that's fine. That should be GST. They should be charging you GST on that. But if there's extra duty and customs brokerage charges, a lot of the times those will not have GST on them. So when you do go to put in your shipping and your freight and your duty expenses, you need to watch those receipts very carefully, because it's a lot of the time not going to be a flat 5% on the total that you are charged. So you need to make sure that you're making sure that that's the right amount. So that's freight and duty and postage. So let's talk about home expenses. So home expenses are very important. When we're talking about home expenses, we're claiming a percentage or a square footage based percentage of our home for our sole proprietorship or our incorporated business. When we start at the top, let's talk about people that own their home. So if you own your home, things that you are writing off on your taxes is going to be your mortgage interest. So not your mortgage payment, but the interest paid on the mortgage. Okay, you'll get an annual statement from your bank once a year, usually in January or February, that shows what you paid in the previous year for interest. If you do not have that statement, you just have to call your bank or your mortgage company, and they will send you a copy of that. That is not eligible for GST paid, okay, because that is an interest expense. Interest expense never have GST on them. The next one that you're going to claim is home insurance. Home insurance is great, but again, we talked about insurance at the beginning of the video. We are not claiming GST paid on insurances of any kind, including home insurance. Property taxes is another one. Property taxes is not eligible for GST paid. You do not get the credit for GST paid on your property taxes. But when we talk about other home expenses like repairs and maintenance are very important because that's usually going to be through a subcontractor, or that's going to be through Home Depot receipts or Lowe's receipts or whatever it is that you have. Those receipts will be eligible for GST. But the most important part about home expenses, even when they do qualify for GST, is that you're only claiming the GST on the portion that you claim. So we calculate everything at 100%, and then generally speaking, your home expenses will be anywhere from 20 to 60% depending on your industry. That is one of those things where you need to only calculate the GST paid on your percentage. So you're not calculating the GST on the 100%. If your home expenses are only being claimed at 30%, then you're only claiming the GST on the 30%. Okay, it's very important. I just realized one very important category, and I remembered it based on home expense percentages. So I have a lot of clients that I do taxes for that are day home moms. I'm going to do an entire segment specifically on day homes in the next couple of weeks because I think that that's very important. Childcare services are not eligible for GST if you are a day home. So if you could make $100,000 being a day home, you do not have to claim GST, but that means you do not get to claim the GST on your expenses paid either. Okay, that is one industry where they don't really like it if you claim the expenses, but you don't have to claim the income. Talked about earlier, there's some medical expenses or some medical categories where they're okay with you not claiming GST on your sales, but they're okay with you claiming the expenses. Day homes do not work that way. So when we talk about day home percentages of home expenses, they can claim up to 60% of their home expenses on their tax return. But again, because there's no GST there, we're not calculating the GST on the 60%. When it comes to home expenses, briefly, if you do want to claim more than the normal 20 to 30% of your home expenses, which is just a percentage base that we use, then you need to justify it by square footage. We do have a lot of businesses that don't calculate the square footage because it's impossible. If you're like me, sometimes you do business on the couch, sometimes you do business in the basement, sometimes you sit in your office, sometimes you sit in bed. It makes it very hard to differentiate an actual square footage amount, which is just fine. That's where we use those percentages. So CRA has said that 20 to 30% of your home expenses is pretty much the green light. Everybody can claim it, no big deal, not going to get audited. Again, just not a big deal. But if you want to claim more than that, unless you are a day home that is perfectly entitled to 60% of their home expenses, you need to calculate the square footage as best as possible. So that will usually mean defining a space in your home that you specifically use for business. If you have an external shed or garage that you use as a shop or something like that, you can calculate more of your home percentage. But again, you're usually doing a little bit of square footage calculation because if you use a home office inside the house and you use an entire garage space as a shop, you could be closer to 40% or 45%. But again, it depends on the square footage of your house and the space that you're choosing to use for business. Okay, so reiterated some of those expenses that are eligible for GST and some of them that are not. Let's talk about auto expenses. So we're talking about auto expenses. Fuel is going to be one of your biggest expenses when it comes to your vehicle. You can write off GST on the percentage of gas that you are claiming, so your fuel receipt total, which is great. Your insurance is not, again, GST eligible, so you cannot claim expenses on insurances on your vehicle. Your license and registration, however, do have GST on them. So if you look at your pink card, which has your total paid for registration, it will actually show that there is GST there. And if you do not have a copy of that, you can go to a registry's office wherever you set up your file, and you can request another piece of documentation that shows that there was GST paid. Your registration is either going to be every 1 or every 2 years, depending on how you choose to pay for it, and your license will be roughly every 5 years, unless you're like me and lose your license from time to time. Then you can claim it for every time that you actually have a physical receipt for it. But please don't go lose your license just so you can get an extra GST credit. I have had people do that. Repairs and maintenance on your vehicle. So repairs and maintenance, when we talk about repairs and maintenance on our vehicle, we're talking about functional expenses. So functional expenses are going to be things like oil changes, tires, windshields, engine work, basically anything that's not associated with an accident, okay? Vehicle expenses that you cannot claim ever whatsoever, 100%, never ever going to happen, speeding tickets, parking fines, all those other lovely things. You cannot write those off on your taxes because they are a penalty because you did something wrong. The government is not going to give you back money for something that you did wrong. Do not bring them to me. Do not ask me about it. It's never going to happen. We do get asked a lot, so I have to cover that. So let's go back to repairs and maintenance. So repairs and maintenance, again, as long as you can produce documentation that shows that there was GST paid on that expense, then you can write that expense off on your taxes. Now, just like home expenses, we talk about percentages or kilometer-based determinations of percentages on vehicle expenses. You can only claim the GST on the percentage of what you're claiming. So if you do not keep a fuel log and you are kind of a part-time side business, you can claim something like 30% of your vehicle expenses, okay? If you claim 30% of your vehicle expenses, then you could only claim the GST on the 30% of vehicle expenses that you're claiming, not the 100%. So these are very important things, especially if you're out there trying to do your own tax return, which is fine. If you require help or you have questions, hit that send message button and I'm very happy to help you out. We did cover this earlier. I do not charge extra to file your GST on your sole proprietorship taxes or on your corporate taxes. That's included in the price. So if it's just easier, bring them to me and I will make it all pretty for you. But we want to basically calculate all of our expenses on our business first and then determine the percentages of home expenses and vehicle expenses. And the very last step is to do our GST. So then what we do is we go through all of those expenses that we've chosen to claim and we calculate out the 5% of sales and the 5% out of expenses, and then we file the GST. So the GST is the difference between your GST collected on your sales and your GST paid on your eligible expenses. So if you have insurances that you are claiming, which you will, if you have percentages of home expenses that are not GST eligible, you are going to have more expenses. So if you took all of your expenses and you took 5% of them, that's not going to be accurate because you need to take out those categories that are not GST eligible. So your percentage of your expenses paid is going to be out of whack because there will be those expenses that are not GST eligible, whereas your sales, however, is usually a rough 5% of exactly what you actually charged. If you do happen to have exempt sales, so like I said, you have US sales or you have other country sales, that's perfectly fine, but those are GST exempt. So to reiterate, because we're just coming kind of to the end of this talk, what we need to do is we need to get a GST number if we are making more than $30,000 in sales in a 12-month period. And once you get the GST number, you have to keep using it regardless of whether you hit $30,000 or not, unless you choose to actually contact CRA and formally close your GST number. But you do need to keep in mind that if you are going to fluctuate your sales, so one year you're going to be at $30,000, the next year you're going to be at $10,000, the next year you're going to be up to $35,000, it is not worth it to close your GST number in the odd years where you're not earning $30,000 worth of income. It's easier to just keep the GST return open, file the GST returns, and you go about your business. If you try and flip-flop too often, CRA is just going to tell you that you can't flip-flop anymore. So they're going to say either you have a GST number or you don't have a GST number. And 99% of the time it's you have a GST number, so you need to keep filing, okay? You can choose to get a GST number when you hit $30,000 in sales, or you can get a GST number preemptively if you have heavy startup costs in your business. So if you're a contractor and you need to buy tools and supplies and you have these heavy upfront costs, I'm always going to suggest that you get a GST number preemptively. And the reason why is because then you can capitalize on all those startup expenses. If you get all these startup expenses and then you don't get a GST number until you hit $30,000, you can't claim the GST on those starter expenses, which makes it very much a pain in the butt. Okay, so we need to do that as much as possible. Lots of expenses that are eligible for GST. Insurances are one that is not eligible for GST. property taxes, mortgage interest, those are not eligible for GST. No depreciation on assets is eligible for GST. Pretty much everything else is eligible. If you guys have other questions about what to claim and what you can't claim and what you can claim, I do believe I've either done a video already or we have one coming up in the next week or two on what you can write off in your business. Or if you guys need a free cheat sheet, then you just need to hit that send message button or shoot us an email, and I'm happy to send that over to you. And we're happy to provide those resources because it's something that you guys need to know when you're running your business. When it comes to filing your taxes at tax time, if you would like us to file the GST with your tax return, then you're going to bring me the form that you get from CRA that has the access code and the filing period on it. We need those numbers so that we can file your GST. If you do not have those, but you do know what your GST number is, we can also file an authorization to represent your GST number to CRA. If we do that, then we don't need the access code, but that does take a couple of days during tax season, probably about 7 days. If that's the case, then you need to make sure that you get us that authorization in time so that we're not writing that deadline and unable to file your GST on time because of that, okay? We cannot be held liable if we cannot file your GST on time because you didn't give us enough time to get that authorization through. Other than that, that's kind of a little bit more information on whether or not you need a GST number and what you need to do with that GST number once you have it. If you guys have more questions about your GST numbers and when you need it, what you need it for, I want you to hit that send message button or shoot me an email. I'm happy to clarify anything else. We don't charge for free consultations, so if you would like to just come meet with me or one of my associates and you'd like kind of a rundown on what it looks like to run your business and make sure that you're doing everything properly, then you again just need to call us and book an appointment, and we're happy to meet with you. And then yeah, we'll be back on another talk next week. I'm not sure what we're running next week. We are running home office expenses next week. Hey Nancy. Glad you find this very helpful, and I will watch for your message. Yeah, next week we are working on home office expenses. We're going to dig into running your business from home, what it looks like to be entitled. So we did run through some of that information today. So some of the information we're going to go through next week will be a recap of what we've covered today, but it's still very important that you understand how to use your home expenses, what you're entitled to, what percentages, and how you claim it. So we'll be going through that in more depth. And the following week we'll actually be covering vehicle expenses 101 as well, which is going to be everything to do with claiming expenses for your vehicle, which again we did cover some of in this video, but we will be reiterating that and diving into a little bit more detail when it comes to that in 2 weeks as well. You guys can see the full calendar, the full event list, the upcoming event list on our Facebook page. And if you guys are looking for more information on any of these videos, or you're looking for more helpful tax information and articles, you can join our tax group, which is Tax Tips Business and Personal. If you search that into Facebook, you will find our lovely little group. Please feel free to invite your friends or anybody else that you think might use some helpful tax information. You can feel free to share your business. You can ask questions. You can comment on the discussions, and I'm happy to provide whatever I can as far as support and help for you and your business. And if you like what you see, obviously make sure you give our Facebook page a follow, and if we can help in any way, send the message or book an appointment, and we look forward to meeting with you guys. Thanks for tuning into my tax talk, and I'll see you guys next week.